Robschild. Nothing I say is investment advice. Welcome to the show where we view financial markets through crystal ball gazing. J.P. Morgan once said, "Millionaires don't need astrologers, but billionaires do." And so we begin. Today is March 7th, 2024, and we're going to start with a headline from CNBC.com. Powell says the Fed is not far from the point of cutting interest rates. Inflation is not far from where it needs to be for the central bank to start cutting interest rates. I think we're in the right place. In other words, we strangled the economy enough, it's slowing down. So that means that stocks go down, right? That means the economy is slowing down and it's time to start cutting, right? Well, the way he sees it is that we've, been really strangling it enough, and then we're going to continue to strangle it, but we're just going to ease a little bit. The problem with that is that once we start easing, usually that's when more data comes in showing greater and greater weakness until all of a sudden we're turning on the money printer again. It's just where we are in the cycle, and the likelihood of it playing out as a soft landing is pretty low, and there being a recession, the chance of that, or even a depression, I believe has a good probability, especially when I look into my crystal ball. For now, market participants see Fed Powell saying that cutting is coming means that that's good news for stocks. We hit an new all-time high in the S&P 500. Even smart money, the smart risky bonds, agree. They're supporting this. There's no weakness here in high yield corporate. All of this coincides with the dollar weakening. This is a chart of DXY. When this goes down, it just means that the value of the dollar compared to other world currencies and commodities is losing a value. And so we've been seeing it going sideways for a while, and we seem to be breaking down a little bit here. Will we continue to break down lower and lower? If we do, we can actually expect that to put pressure on stock valuations and commodities and everything that people invest in to continue going higher. We also see this in XHB Home Builders Index. Once again, new all-time highs. We believe that building houses is going to be more profitable and better than ever. And then we have SMH. This is the semiconductor ETF. And we are at another all-time highs. Now, when I zoom out on this chart and you see this kind of movement, the value of this thing in 2019 being around $50 to over $200, there's no possible way that this could be a bubble, right? I mean, heck, we need the semiconductors so that we can mine more crypto, right? And do more AI. So you have your semiconductors, your AI, and your crypto. There's no possible way that these things are becoming overvalued. No way, right? I mean, it's not like I can use artificial intelligence for free yet. We're nowhere near those days. Oh, wait. I already am using AI every day for free. I don't even know how people are supposed to make money in artificial intelligence when it's already available for free. I'm not sure they're going to make a dime in this industry, to be perfectly honest. To suggest that this is not a bubble, I think, is not intelligent. The only question I have is, when the bubble pops, is it going to take everything down with it or not? Are there going to be certain assets that are going to hold their value or even increase in value? You might expect gold to do well. in an environment where there's a bubble existing and perhaps popping, for example. And that's actually the last chart that I want to share with you today. It's not actually gold, it's the gold miners chart. So these candles down here, the red and green, this represents companies that find gold. As you can see, today's valuation is much lower than even it was all the way back in 2011, 2012. Gold miners increased to this valuation when the price of gold had surged way, way, way up in 2011. Now, it is worth noting that gold right now is also at an all-time high. And the companies that find gold and sell it, the miners, are nowhere near their all-time high since over 10 years ago. Over 10 years ago at this point. This can't go on forever. Either people need to stop trying so hard to find gold that there becomes an underinvestment to the point of where gold can continue going higher. I mean, that's really what's going on here, isn't it? The price of gold is actually too low. It's too low for people to find investing in gold miners to be very attractive. It's not very attractive yet. So the equipment, the costs that it takes to get gold out of the ground are actually not worth it, and apparently have not been worth it for a long time, over 10 years. Is this one of these markets where gold will finally rip high enough where gold miners can finally make good profits? Is this one of those long underinvested markets, or will it continue to be underinvested in? I'm skittish on this market personally, only because I just can't help look at the nominal price of gold at an all-time high and say, oh yeah, it's a good time for me to invest in gold companies. It's like, I'd rather see, I wish gold wasn't at an all-time high right now. I wish it just connected a little bit better with the value of gold miners. But this is a messy situation. I don't know how it's going to resolve. My crystal ball doesn't show anything in regard to gold and how that's going to be working out, but it's something I'm keeping an eye on out of interest more than anything else. That's all I have for you for today's show. I hope you enjoyed. Thank you very much for watching, and see you next time. Robschild.